Hello, everybody.
I'm not centered.
Okay, you know this is live. We can't
Well, that's
change
the,
it.
you know.
Well,
Let me help you out. I'm not centered either. All right.
Hello, everybody. We are in Fort Myers today.
What's up, Fort Myers?
Yeah, I don't know why we're here.
Because it's better.
I guess so.
It's better that you drive instead of me.
So today we are in Fort Myers, and we have a couple of things to talk about, right? A couple of big things to talk about.
I think we have a couple very big things to talk about. I mean, let's start with the most pressing news.
Yes.
The Fed this week.
Everybody's talking about the rates.
Yes.
So specifically what happened this week with the rates, it was Fed week. So
And by the way, everybody's talking about the rates, and most people are talking about the rates incorrectly.
well, most people are making very definite statements about the rates without any context. And I think having context about this is very, very important. And look, it is true that we have the lowest rate we've had in a long time. But what's happening, right? So the Fed met this week. Mm-hmm. And they did a statement. A lot of people were talking about maybe the Fed cutting the rates.
Yes.
We didn't think that they were going to cut it.
I knew they wouldn't.
And they didn't.
Right.
Now, this doesn't mean that the rates are higher now, because their statement is not just about whether the Fed cuts the rate or not, but it's also about what the statement says.
Yes. Now let me jump in on something, though, because one of the biggest points of confusion
Because
is
you like
that...
to interrupt.
Well, yes. And one of the biggest points of confusion people have is that when the Fed cuts the rates,
right,
they're cutting mortgage rates.
And that's not the
case. They're not. So the Fed is cutting the federal funds rate. The federal funds rate is the interest rate that the government charges banks for overnight lending. Okay, but so whether they cut the rate or not cut the rate doesn't mean jack to us. However, their cuts or not is indicative of their opinion of the overall strength of the economy, okay, and that's what impacts mortgage rates.
Because it impacts the bonds, the mortgage bond market, and that makes the rate, go up and down.
And that's why, to your point, the statement is more important than their actions a lot of times.
So we were checking on the statement, and the statement was very similar to last time, but the one thing that they changed is they removed the word patience from the statement.
Huge.
And that's huge.
Huge.
So what that says, or what we think it says, is that's going to set the stage for them to cut the rates next month.
Yes.
And because they removed the word patience, then the market, the bond market reacted positively to that.
Very, very positive.
Which means, just in layman's terms, it means that before the Fed statement, the rates were higher than after the Fed statement.
Correct. And we knew that. Okay.
We knew that coming in, and we've been talking about that. We mentioned that last week. We mentioned that the strategy that we're having with all of our clients right now, and what we're telling everybody, including today, that's getting under contract, is listen, let's not lock the rate right now, because you, with the same exact credit score that you have right now, with the same exact house that you're buying, if we wait, the rates can be better.
I am consistently locking people between 0.25% in lower rates than where they would have been at if I would have locked them in application. And this is what pisses me off. So many loan officers have this blanket rule, like I lock everybody at application,
regardless of what's happening,
or ignorant of what's happening, not even knowing what the hell is going on. I mean, let's be honest with you. You know, if you're working with another loan officer, do me a favor, ask them how the removal of the word patience from the Fed statement is impacting the mortgage-backed security bond market, and they're going to look at you like you have 12 eyes, and that's a freaking problem.
That's a problem.
That's a problem.
At the end of the day, that's the advice that we're bringing into the table.
That's our job.
Look, I locked somebody yesterday because that was
the right time.
I had to lock them because we're closing in a couple of days, and I saved them $100 in payments.
Dude, it's huge.
$100 from when we started, simply because we waited.
Yes, and by the way, that's $100 a month, which is $36,000 a year on a 30-year mortgage. It is freaking monstrous. I was able to lock somebody.
It is monstrous.
I was able to lock somebody on an investment property on a 15-year fixed in the 3s.
Yeah,
dude, come on, man. We haven't done this in a long time. So look, so here's the prediction. Okay. Whether it's the next meeting or the meeting after, there will be a cut to the rate, unless things very turn around economically. I don't see that. Right. In fact, right now, 7 members of the Fed are predicting 2 rate cuts this year. Okay?
More than one, yeah.
Now, some things that could reverse this opinion is
A tweet.
yeah, a tweet, a drone getting shot down, but which obviously are truthful statements. But what I was going towards was, if this trade deal with China gets worked out, that will be incredibly positive for the economy and could reverse everything.
It could.
It could. I don't see that happening per se, but I think it could. But look, these are all signs that things are moving in a downward direction for interest rates. Okay, and by the way, I don't know if we talked about this last week or not. I know you and I have been talking about it a lot. All of this is indicative of an upcoming recession.
Yes.
And please understand, during recessions, house prices go up.
Why?
Interest rates go down.
Interest rates go down. Because interest rates go down, then your $1,500 a month can buy you a more expensive house. So there's more people buying in the market. And this is the thing. This is what I was explaining to a client. Is look, whether the unemployment rate goes from 3% to 6%, those 6%, that bottom 6%, it's not really buying houses right now.
Right. It's the other 94 or 97%.
Yeah, so it doesn't really impact negatively the housing market. So anyways, the point is, it is true that rates are lower than they were last week. And look, guys, when you get into a mortgage, it's not just about if you have this credit score, then this is going to be your rate. You also need to think about what's happening in the economy and what's happening with the mortgage-backed security market right now. So a strategy when it comes to locking or not locking your rate, it's important. Talk about that with your loan officer, and just don't talk about that with your loan officer. Just call us.
Call us.
Talk about that with us.
And by the way, my buddy Joe just jumped on there. What's up, Joe? Shout out to you. Okay, so that's the first thing we want to talk about. This Fed statement is big. And look, stay tuned to us on a weekly basis. So we're going to continue to break down what's going on in the economy because there's a lot of change.
Yeah.
And speaking of change,
the second thing, look, for all of you, the friends of ours that are realtors, man,
stressed.
This is something that you really, if you haven't heard about this, you really need to start researching this, because this is something that can really change the landscape of the real estate community. It's super important. It's something that is happening right now. It's something that is real, and it's something that you cannot just brush off by just saying, yeah, well, we have a strong presence, so we'll be fine. So what's going on?
Yeah, so look, let's talk about this. And let me preface this. Keep in mind, we announced several weeks ago that we are creating our podcast called Real Estate of Tomorrow. And the purpose of that podcast is to break down these changes happening in the real estate, because we've been talking for a long time that the real estate industry is going to change. And now we have some meat behind it. So look, let me break it down, okay? There is a class action lawsuit that has begun. And the class action lawsuit is going after the MLSs. Now, the MLS is the multiple listing service. That is where real estate agents upload the properties to. It's basically, a database, okay? And Zillow and Trulia, that's where they pull all their housing data from. And here's the premise of it. What they're saying is that if you're a real estate agent, you have to work for a broker. If you work for a broker, you have to be a member of the board. If you're a member of the board, you have to be a member of the MLS. And when you post listings to the MLS, they require you to split your commission, it's called a co-broke, with the other agents. And the premise of the lawsuit is that mandatory co-broke violates the what is it called? When one industry dominates everything. It's so
Monopoly.
bad when you go in live and you forget the word.
Monopoly.
Yeah, that's right. It violates the anti-monopoly laws. And look,
it's his own. It's his first language.
Yeah, it's my first language. So you're third, right?
Yeah.
So anyway, it violates the anti-monopoly laws, and we have to understand who is bringing this lawsuit. Look,
but this is the thing. Just to slow it down a little bit. A lot of times, and I was talking to a realtor last week about this, and just in conversation, and the answer, the immediate answer to something like that is, well, we have a very strong lobby. So because we have a very strong lobby, there's a lot of money behind us. A lot of times they're trying to break us, but this is really not gonna succeed. Why is this particular thing different than some law that they're trying to pass in Congress?
Great point. Really great point. And here's the thing.
This is a great point.
We have to understand. That's it. He walks off. He's done. We have to understand that this is not a political issue. This is a civil lawsuit issue. And lobbying powers don't mean a damn thing in a lawsuit. So NAR's power, which is real, they're the second most powerful lobbying group in Washington behind AARP. They are powerless to impact this. Absolutely powerless to impact this, and that's why this has meat. And let's talk. Let's talk a little further about who's bringing in this lawsuits. Okay, the lawyers that are at the top of this lawsuit are the same lawyers that took out Big Tobacco.
Yes.
They took out Apple.
Which means they have money.
Yes. Lots and lots of money. And they are actually listed in the top 5 of the most feared real estate agents, or most feared lawyers in America. I got a question there.
Nice.
Oh, what's up, brother? Look at that. He sent me a referral. Thank you, Joe. So anyway.
Thanks, Joe.
So we got to understand that there's a lot of power behind this lawsuit, and it's a class action lawsuit.
Yes.
So they're running ads trying to get tens and tens, hundreds of thousands of people. They're estimating this lawsuit, and it's against 11 separate MLSs. One of those MLSs is the MLS here in Southwest Florida. The lawsuit is projected to be upwards of $50 billion with a B, a $50 billion lawsuit. Now, if it wins, it will wipe out all 11 MLSs, and the ripple effects will be very far and very wide.
And this is real. This is happening right now, and this is something that, look, who knows when it's going to end, right? Who knows if it's going to be 1 year, 2 years, 3 years, 10 years,
15 years, yeah, who knows?
Who knows? But this is something that if you're a realtor, if you're in the real estate community, if you're, quite frankly, even for us, right? If you're any part of the transaction of buying and selling a house, you need to be aware of that.
Yes.
Because the MLS is something that it's really powerful right now when you're trying to buy and sell. So that's one thing that's disrupting. And then there's another lawsuit that's happening, I believe is in California. Right?
Against
That's
the
going
teams.
particularly against teams. And what they're saying is, look, if you are a 1099 employee, if you're really an independent contractor, then you shouldn't be forced or you shouldn't be required to do certain things like attend certain type of meetings, be there at certain time,
split your fee, split your commission,
split your fee every single time. So all of these things are not things that are normally required for 1099 employees, for 1099 private contractors. So what they're saying is, look, if you're not an employee, if you're just 1099, then you shouldn't be required to do all these things. And they're doing this lawsuit in California, and same thing, guys. If they win, then
let's break it down a little bit further. So what does that mean? So what they're saying is if they reclassify agents from independent contractors to employees, then another law kicks in called the Fair Labor Standards Act.
Yes.
Now let me talk
Which
about
is what happened to us.
I was going to say, the FLSA wiped out hundreds of thousands of loan originators in America because what it said is we are required to punch a clock and get paid an hourly wage. And the second that happens, unless you're doing a certain level of production, you can't stay employed.
Because you cost your employer.
You cost too much. FLSA passed, I fired, I think, 7 or 8 people the next morning. Just all of the part-timers. And think of how many agents are part-timers.
Yes.
So look, here's what
same thing. This is happening in California. It's happening right now. And obviously, if they win, there can be a domino effect everywhere else. And teams are very powerful here. And not just teams. There's a lot of small brokerages that require their 1099, the realtors, to do certain things like this. So they could really, really disrupt the realtor community and could really disrupt the way that they get paid right now.
Yeah. Now look, let's bring this back down. I do not think
No, it's not. This is crazy.
Look, I do not think that realtors will cease to exist. Okay. It wouldn't surprise me if the number of agents is greatly reduced, but I don't think agents are going anywhere.
Loan officers didn't cease to exist.
Exactly.
Right?
Exactly.
We're still here. Second.
And so I don't think they're going to cease to exist. And here's what I don't know. We don't know how long this is going to take. We don't know what's going to come out of the other end of this. But here's what I think. I think at some point, the real estate industry is different as a result of these things than it is today. It's completely reasonable to me, and we're making changes in our business as a result of that, which is probably the next talking point. The real estate industry 5, 8, 10 years from now is going to look radically different than it does today. And look, if you're a real estate agent watching this isn't meant to scare you. This is meant to awaken you to whatever changes you have to make. Look, we're making our changes in our business, and this Facebook Live is a piece of it. The world is changing, and you have to change with it. So look, it is very, very interesting to me, these changes that are happening in the realtor industry. You got to understand that the amount of commissions earned in real estate nationally is something like $100 trillion.
Yeah.
It's a
There's a
huge
lot of money.
number. Okay, now in next week's episode, we're going to talk about this iBuyer thing, which is another real disruptive thing that's happening in the industry. And by the way, that the iBuyer thing is not a prediction. This is happening.
It's happening
right now today.
In a lot of places,
is real.
a lot of area codes.
Yes.
In a lot of area codes, it's really prevalent.
Absolutely.
And same thing with all these things, guys. I mean, I know we're in Southwest Florida. Southwest Florida is a little bit of a bubble for a lot of things.
Yes.
But we're not completely immune to the changes.
Listen, as a New Yorker, okay, a New York City taxi medallion, which is basically your license to have a New York taxi, literally was worth millions and millions and millions of dollars. The valuations of you could buy them now for $50,000 because of an app called Uber.
Yeah.
Okay, so travel agents. Do travel agents still exist? Yeah. Would it ever cross your mind to call travel agents?
Well, I have a travel agent in my BNI group, so yes.
Okay.
I would totally call Cherie.
Okay.
Other than Cherie, never.
No. So look, these things
What's up, Cherie?
these disruptors have happened. They're continuing to happen. It's silly to think it's not going to continue.
Yeah.
The Florida governor last week passed a law allowing driverless cars to happen. Go Tesla. What's up, Elon? So look, I mean, bless you.
Thank you.
The world is changing. So look, next week we're going to talk about iBuyers. The interest rate world is changing right now, which, by the way, going back to
we'll keep you updated on the rate and what's happening.
Yeah, and look, by the way, it is very likely if you're looking to buy a house today or you've recently bought a house, it is very, very likely that 2 years from now, you're going to be looking at a refinance. So what does that mean? Maybe you shouldn't be paying points. Maybe you should be focused more on keeping your closing costs low nowadays versus your interest rate low if we're going to be looking at a 2 or 3 year exit strategy with rates coming down.
And same thing, and this is something that we do with every client. We can have an estimate of what your house is going to cost in a couple of years, considering recession, considering the rates going down, and what the strategy is. Maybe right now it makes sense for you to get into, I don't know, an FHA loan and then trying to refinance later on out of the FHA loan, out of that mortgage insurance. So there's a lot of strategies that come into play here. And it's just an exciting time. It's a great time to buy right now because the rates are lower. It's a great time to start looking into refinancing and talking to people and seeing if it makes sense to do things or not. And look, again, if you're an agent, every time there's change like this, there's a lot of opportunity, right?
Always.
Even in the lender community, a lot of things changes. A lot of people left the community, but people that stay there were able to be very successful.
Look, I'm sitting, I think we could both say this, I'm sitting on the largest pipeline of my entire career right now. And if you ask most people, they talk about how slow it is.
Yeah.
And, yes, I think we're, great loan officers, but at the end of the day, a lot of it is we are aware of what's changing in this marketplace, in this world, and we're changing with it.
Right.
And there's value in that. And if you're working with loan officers or agents, for that matter, that have their head in the sand and they don't know about these things, you're working with the wrong people, give us a call. We'll help you on the loan side, and frankly, we'll direct you to the right agents because there's a lot of agents that are on top of this and have made huge changes. You have to be.
You have to be. So that's what we got, guys. So just to summarize, the agent world is getting disrupted a lot. There's 2 lawsuits right now. We're going to talk about iBuyers next week. And guys, rates are low, and we really think that they're going to continue to get lower.
I think rates will continue to drop, and some Fed rate cuts this year is extremely plausible. The one outlier on that is that China, the tariffs with China,
and any tweet.
Yeah, and a tweet.
That could happen.
All right. That's what we got. Listen, if you need anything, reach out to us. DM us with any questions. I was able to talk to a few people after last week's episode, so that was cool.
Yes.
And that's that.
Same thing. If you have a question about the lawsuit and all that, let us know. We'll send you some information. And it's just interesting. And quite frankly, if you're a realtor out there and you're interested in giving your 2 cents, we would love to have you maybe next Friday or in a couple of Fridays for you to talk about this thing.
Absolutely, yeah.
Awesome.
And please, let's have some friendly banter back and forth, man. If you disagree with what we're saying, leave it in the comments and we can hash it out. That's always good stuff.
All right, guys.
I'm Scott DiGregorio. I'll catch you next time.
Edgardo Ballantyne. Take it easy.